Hello and welcome to this week's ASX Investment Opportunities in Review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Up on screen there is a graph of the ASX 50 model portfolio, which year to date's up around 12.5%. If you'd like to subscribe to the technology that I present today, we're offering a special where you get 12-month subscription for $1,320. So please contact Leon at Investor Signals, call the office on 1300, or visit the Investor Signals website and select the free trial. I'm moving straight into the graph of the XJO. Volatility's picked up in global markets. We've seen a correction in the XJO back to around 5,900 as the support level, which is marginally above the prior low there in March. But for the most part, our view is, when I expressed this in the last recording, is the market's in for a period of prolonged consolidation, which makes trading a little more difficult, but we do feel that there are a number of compelling opportunities that are coming up where quality businesses are being sold off in line with the rest of the market. Last week, we ran through the full ASX 100. We created a list of opportunities. So part of today will be go back and revisit those opportunities or those notes and refine them even further. But what we're going to do to start with here is we click on watch list, we come into the drop down list, and we're going to go through the recent ASX signals. Now this stores the last 7 days of algorithm buy and sell conditions. So let's select that. Here's the list here. Now we could sort that by using these columns to say, get all the buys to the top or all the sells to the top. We could apply a filter, which turning that on then allows us to sort any of these columns. So for example, if I only wanted to look at the sell signals recently, I could type in sell, and there they are there. If I wanted to only look at the buy signals, so that filter searches that particular row for whatever the word is that you've typed in there. When you're finished, it's important to make sure you delete that word and then turn the filter off if you don't want it there anymore. So now what we're going to do is go into the first of the symbols, and we're going to start moving through these. So the first one's actually a sell signal, which is News Corp. So just recognizing that the stock's broken down, made a lower high, and we've had the algorithm sell signal there at $19. If we have a look at the shorter term indicator here, it's turning negative. So it's one of only a handful of sell signals that are present in the market at the moment. We obviously have a large number that have been present for a number of months, but right at the moment, given the market's had a sell-off, you're not seeing a lot there. Hansen Technologies is another sell signal with resistance there at $14. Beta shares, so this is the bear fund. So we're seeing essentially buy signals in the index, and we're seeing sell signals in the inverse ETFs. So if we continue to go through these, ARB Corporation, we've got a buy signal there at 17, but not on our list. ASX, so this is probably the first stock that I'll draw your attention to. I think this is a very high quality business. It's corrected from $70. We had a price range there of between 60 and 55. I'd nominated 58 as the entry level. I think as the stock moves into this range, you're going to see it form a base, and you want to look at accumulating this name at around 3.5% dividend yield. Interest rates, whilst going higher, I think they still stay low in relative terms, and I think once the market comes to terms with the correction here, that ASX finds a base. So we'll make sure that that's on the list. I'm just going to add some notes as we go here. Moving on from the ASX, not doing anything on that one. So there's a large number of ETFs that have come up off the recent signals. So I won't spend too much time on those today, but you might. So when you see the .AXW, it means it's an ETF opposed to a stock is .ASX. And if you turn on Leon's charts, which is this one here, show Leon's charts, you'll see the support or resistance lines that I'm looking for price to retrace back to. WiseTech Global, just higher low there, but Australian high cap or high PE, I should say, technology companies have endured some pretty heavy selling. So companies like WiseTech, Afterpay have had really substantial corrections, somewhere in the order of sort of 40 to, around 30 to 40%. Bendigo, so this is one of the first banks to be added back into the model portfolio. The structure's still a little bit flat, I would say, but the lower high patterns continue. What we're starting to see here is maybe the beginning of a reversal of that, but certainly this $9.80, $10 level would have to hold. So keep an eye on the short-term momentum indicators. But I suspect the banks, if they were to find support, probably fail at a lower high formation again, and we'll see them soon removed from the model. We'll keep an eye on that. Blackmore's support there at 120, but not one of our preferred allocation. I think this looks interesting. Breville, we've seen the price fill the gap down here and a strong reversal on Tuesday. So you can see there the price filled the gap perfect down to pretty, that 1160 level. Keep an eye on this. The short-term indicators turning positive. I think you could think about this as a buying opportunity with a stop below that support level. So maybe make a note and add Breville to your list. Credit Corp not doing there at present. Charter Hall, we're seeing a number of real estate investment trusts come up, but I'll get to the ones that we're wanting to keep an eye on. Cromwell Property, which is a real estate investment trust. Corporate Travel, not doing there at present. I will say that Webjet, Flight Centre and Qantas, so maybe make a note of those three names. So Webjet, Qantas and Flight Centre, they've all had substantial sell-offs, and I still think sort of low Aussie dollar, strong travel demand it supports those names. So keep an eye on those. Now, this is one that had made its way onto our high conviction list for last week's webinar, which was Cleanaway, and we'd posted on the blog that an entry level at around $1.70, and we started buying this on Friday. So looking for a move back up to around this $1.90 level in Cleanaway. Please make a note of that one, CWY. Now, CYB, this is one that was on our list, not so much a high conviction, but it certainly made its way onto our general list. CYB's the spin-off of NAB, Clydesdale Bank in the UK. They've just recently acquired Virgin Money, gave up about 30% equity to acquire Virgin Money. We think that the story here is quite solid long-term, so I'm seeing this correction back down around 525 as a reasonable opportunity. Keep an eye on the shorter term momentum indicators. There are some risks in this around a messy kind of Brexit scenario in early new year, but that's one to have a think about. Domain Holdings not doing there at the moment. ETF not doing anything there nor there. Geared ETF, so this is it. If you're thinking that we're going to see a strong bounce in the XJO, which I'm not sure that's the case. I think the bounce is moderate, but I don't see it really rallying up to take out the recent high anytime soon. But this is a way to get exposure to that. So buying it, I think you run a tight stop loss given that it's a long geared exposure to the XJO, but you could certainly have a think about buying here, watching the short-term momentum indicators. If we saw price come back down and break below that low there of around $20.60, then you probably want to think of getting out of it. But we'll continue to watch this and just see how this behaves over the next few weeks. It's certainly an interesting opportunity to get quick leverage to the XJO just through a simple ETF on the ASX. Goodman Group, terrific property trust, not doing anything there though. Growth Point, not doing anything there. GPT, so interesting how strong the reversal here in GPT was on Friday. The stock opened down low at around $4.83 and rallied back to close at $4.90. $4.90. I had a high of $4.96 and closed at $4.93. A GPT, we think fair value is around $5, maybe $5.25 if yields soften in the US, but buying it here and selling a covered call is a good way to deliver income. So out of all the property trusts, this one here is one that we're comfortable buying. So I might add that to our general notes. And we'll just say $4.90. Okay, moving on. Globe, not doing error on that one. GUD Holdings, just flagging that's higher highs, higher lows there, supported around that 1270, 1280 level. This hack ETF, so this is a Beta Shares Global Cybersecurity ETF. It has performed very well. If we look back, the last algorithm buy signals at around $5, rallied to $7.50. We're starting to see a bit of a sell-off. You'd expect it to find support anywhere from kind of this old high through here. And we'll just bring this into, and we'll go across select segment, and we might just put that in place from there through to there. And I think it's not unreasonable to form a view that you've probably got reasonable value in this somewhere within that range there. So we might just, and I'll add that onto our list too. Given that I think it's such a long-term growth area of the market, the cybersecurity stocks that it covers, buy, and we'll just say value 625, and we'll have a look at that again if we see that at around those levels. Not doing it there on that one. Home loans, Wilson Group, not doing there. We might just shift that up there and come back and revisit that name. Insurance Australia Group. Now, the insurance companies have been under a bit of pressure as part of the Royal Commission, and I think that's partly weighed on IAG, along with the company delivering a slightly tepid or reduced earnings growth outlook, but it still, nevertheless, the company's still delivering 5 to 8% earnings growth, which is attractive. You're getting close to a 5% dividend yield now, and I think you're looking for a support to begin to develop. If we go back at this old high here was around $7, so I'm thinking we're getting pretty close to an area where Insurance Australia Group finds support. So I'm going to add that one onto the list as well, and just put value sub $7. iShares, so this is just picking up that both mid-cap, small-cap, and the IVV, which is the S&P 500, we're seeing buy signals in those ETFs. And I might just look at the model portfolios when we conclude this, and we'll just have a look at what some of the recent changes have been, given that there's been a large number. So this is the iShares small cap, so exposure to US small cap, which might be one worth just keeping an eye on as the market goes through this sell-off. Now, the two ETFs that I do want to draw your attention to is the ILC, which through one investment gives you exposure to ASX top 20 companies, and then the other one is the exposure to the top 50. I think this sell-off in the iShares 20 is interesting, and what in particular I find worth sort of pausing to think about is obviously the Australian banks have been sold off quite heavily. From a longer term basis, I think any sell-off in the index, you could certainly have a think about accumulating these iShares 20 and 50 as long-term investments. If you're willing to take sort of a 5 to 10 year outlook, you're getting paid 4% dividend in the meantime, and you're getting broad-based exposure to large cap quality companies. So it's something that's worth just having to think about there for passive long-term buy and hold strategy. iShares Core 200, top 200 companies on the ASX, so we've had buy signals there. Now Iris, interesting here, we have higher highs, higher lows, a sell-off back to around $11. Iris's latest earnings result was very strong. Obviously, it's a business that generally won't do well in a bear market, given that its exposure to technology solutions, to broking and financial planning businesses. But just keep an eye on this. I think maybe at around $11, it finds support. May not rally back and create a new high, but I suspect we're getting into oversold range there on Iris. So we might just make a note and add that as well. And I'll just put approaching oversold levels. Aristocrat Leisure, high quality business, growing almost earnings at almost 20% per annum. We've had a correction from 32 to 27, pulled into our target price range. On weakness, you could see it back at 24, 25, but I suspect that we're pretty close to a point now where it finds support. I'll just mark on the chart where sort of deep discount would be if we see further selling in the US this week. But otherwise, I think this $27 level holds there in Aristocrat. And that was one that we'd flagged in last week's recording. Lendlease, correction from 22 down to 18. I think this goes onto your list. I think that looks good value. Again, deep discount is $16, but we could see early support here and a bounce higher throughout the early part of this week. Magellan, not doing anything there at the moment, nor in Mirvac. Not doing anything there. Macquarie Group, so it's been a long while since we've had a buy signal here on Macquarie. It was in the model portfolio from the switch here from sell conditions into buy conditions. It was then removed from the model at about $93. The stock continued with its rally, but now that we've had the pullback to around 115, we're seeing another buy signal. The short-term momentum indicator is still heading a little bit lower, but I think we keep an eye on Macquarie here and see if we can identify. So our strategy is just to watch that at the moment rather than to add it to the buy list. So I'll just put watching for support there on Macquarie, and we'll revisit that on the blog. Wesfarmers. I posted an article on Saturday regarding Wesfarmers on the blog. The spin-off, the vote for the spin-off of Coles happens in the coming weeks, and assuming that goes through by late November, Coles will be separated from Wesfarmers. So this sell-off that we've had from 52 back to 47, I maintain that Wesfarmers was too expensive up at these levels, and for a number of weeks or months I've been saying wait for a retracement back to sort of $45 to $47, which is where we are at the moment. So for me, it's just entering the beginning of a value range. It'd be nice to pick the stock up at around 46, but no guarantees on that. So whether it's one that you maybe scale into in two positions, and the idea here with Wesfarmers would be to buy it and wait until the separation has occurred, maybe let the price settle, and then sell covered calls as we get into sort of that February, March dividend period. So I'm just going to say buy it at $46 there for Wesfarmers. Premier Investments, not doing there at the moment, nor in Pinnacle. ETF there, RCG. A couple of these we'll just keep skipping through. Nothing in Reece, nor in Rural Funds. ResMed, high quality business. I posted on the blog about that. Just mindful that the sell-off in percentage terms has been fairly shallow relative to how strong the rally's been. It was trading $10, rallied 60% up to $16. So it may be one that you just think about either running a stop loss on or just giving a little bit more time for some consolidation to occur. Just flag your attention. This Reliance Worldwide's filled the price gap there, maybe getting some support around 475, but not one that I follow closely. Scentre Group now pushing back on to a 5.5–6% dividend yield, starting to look attractive, but not much in the way of earnings growth. So here's the SFY, which is exposure to the top 50 stocks on the ASX. So that's another one that you can think about in the same context as that ILC that we looked at earlier. Sonic Healthcare, so please add this to your list. I think this is a buying opportunity on the sell-off. We have seen earnings growth slow in Sonic Healthcare, so again, I don't think it's one you can think about it making a new high. I think at best it consolidates and moves sideways, and the range is really probably $23 to $25. So you want to be selling covered calls over that and turning the sort of 4% yield into 10 or 12% cash flow. Smart Group, not doing there at the moment. This is exposure to the top ASX 200, so maybe support down here at around 52 to 54. So I might actually just put a line in place on that one. We can keep an eye on that as to where support begins to develop. Suncorp back at around 1350, but I don't get too excited about Suncorp. I think you could, certainly mount an argument that it's coming back into a support level there at around $13 to $13.50. So we might just revisit that if we see it trade a little bit lower. Quite a few stocks have obviously come up on these recent signals. A big part of today's presentation is really just spending time revisiting these. TPG, I think that's worth noting that the support level there at 740. I just need to revisit the timing of the Vodafone takeover deal and the price there, and I'll try to cover that in next week's recording. Treasury Wines. So I think in a market climate where many businesses are facing potential pricing pressures or impacted more greatly by a slowdown in the market, Treasury Wines would appear to be reasonably defensive. So if we identify a price range there of say $16 down to say $14.50, if we look back at the history of the algorithm signals, they've done a very good job of picking up the higher lows. So I think it's reasonable to be attracted here to Treasury Wines at around this $16 level. So the short-term indicator still hasn't quite really turned back up yet, but I suspect we get a bit of consolidation around $16, and then hopefully the next upcoming earnings result pushes the share price higher again in Treasury. A couple of these ETFs, so I'm just skipping through those. So Webjet was one that I covered earlier, so keep this on your watch list and just be mindful. We've had the correction from $17 down to $13, and I suspect that it finds support around that $13 level. And ANZ Bank, a little bit like Bank Equity. I don't get excited about these opportunities in the banks. I don't think the structures are quite bullish enough yet, even though we've got the current buy signals in place. And then there we are back to News Corp. So let's jump into the model portfolios. So what we do here, click on model portfolio. Let's just go through them and we'll have a look. So what's recently been added to the top 20? Well, Macquarie, ANZ, and Scentre Group. So those three are the most recent additions to the top 20. Let's have a look what's been added in the top 50. So we select that. We get the least number of days to the top. Sonic Healthcare, which we covered that, and I suggested that that's a good buy-ride opportunity. Goodman Group, fast-growing property trusts, 5 to 8% earnings growth, but down to just over a 3% dividend yield, which looks expensive. Macquarie we like, but we're just being a little bit cautious on sort of the entry opportunity there. GPT, I covered that today. I think it's worth adding that and selling call options over. Doesn't trade above 525, but you can deliver good cash flow. ANZ, we're still a little bit cautious on the banks, probably recognise that they're oversold at the moment and ready for a bounce, but don't see the catalyst for them to go up and make new highs. MGR, not doing there at the moment. Texas. So we've seen a number of these real estate investment trusts. If we look at these, that's a real estate investment trust. So is that, so is that, and so is Vicinity. Suncorp getting down to that $13 buy level there. Lend-Lease, we're attracted to that at around $18. So that covers some of the recent ones in the top 50. If we have a look at the top 100, ALQ's been added, TPM's been, or telecommunications, so TPG, that's been added. Macquarie we've covered, Sonic we've covered, ResMed, so this has gone into the top 100 model now. ANZ, and then most of those. Cleanaway, so I started the presentation talking about Cleanaway being added to the model portfolio. Ansell, which we don't mind. So one of the options available is to come into this area, and let's just look at this on the top 50 basis. If you click on the top 50, one way of identifying opportunities is to click on that stock and just toggle through the companies that are in the model portfolio. So now, rather than going through the recent signals as we did at the beginning of the recording, I'm now toggling through all the stocks that are currently in the top 50 model portfolio, and you'll start to see these as the names that have been added, and again you can reference this short-term indicator to identify which ones you're looking at. Now before I finish with the notes and summary of our high conviction ideas, let's just have a look at the ETFs. So there's two separate lists, ETFs to watch, which is just a short list, or the full ASX list of ETFs. Let's click on those. Let's have a look at the ones that have recently been added, and there's a large number of them. And if we actually have a look at the performance of the ETFs that are in the model, even with the market sell-off, the actual ETF model portfolio is performing very well. And if we want to have a look at the ones that have been closed out, you can see here that probably the best way to do is get the sell date to the top. So the current date's now at the top, and we can see there that the recent one lost 5%, gained 18, gained 15, etc. So and you can click on that and then toggle through the ETFs that are in that watch list. All right, so let's go through our summary notes of what we want to look at today. So I'm just going to recap our Lend-Lease. Recap here, we think at $18 it's starting to find support, but recognise in a weak market could dip to $16, so you can approach that through an accumulation approach. Brambles is on our list. I think Brambles at between $10.40 and $10 is a good buy. The attractive part of Brambles is they're spinning off their plastic pallet pooling business soon, which will help unlock some value for shareholders. Now, one that I didn't cover today but was on our list from last week was HealthScope. And at $2, I think this stock's good value. It's finding it hard to find support in an environment where interest rates are heading higher, but I do think the long-term prospects for HealthScope are attractive. Now, Woodside Petroleum was one last week where I said, let's wait for the next algorithm buy signal. Now, it's early days yet. The stock started to correct, but we're really looking for a buy signal somewhere back down at around $32. So we just keep watching for that. There's buy signals not there at present. ASX. I'm going to shift this name down into our high conviction list because I think it's a high quality business and it's a good buying opportunity. So our buy level here is between $58 and $55 there in ASX. Flight Centre, again, didn't cover this one in the earlier commentary, but let's have a look at the graph here of Flight Centre. So $50 first support, deep discounts 45. And I'm having to give these wide ranges at the moment simply because the volatility's picked up so much in the market. So there's Flight Centre. IPL was one from last week where I said, similar to Woodside, that let's keep an eye on it and wait for a retracement and see if we get a higher low formation. So we've started to see the sell-off occur, but I think we're probably still another week or two away. But if we see a buy signal come in at around this sort of 350 level, I think that could be a good buying opportunity. So we keep an eye on that one. CSL. CSL, I posted about on the blog on Saturday. It's corrected from 230 down to 180. The history of the algorithm buy signals has been very good here, and the stock looks good value to me. Well, on a relative basis, keeping in context, it trades on a high PE, but the company's delivering very good earnings. I won't. Car, Seek, and Aristocrat were three technology names that I think provide an opportunity, and you should be keeping those on your watch list. CWY, which is Cleanaway, which we've looked at that today, but I think that goes onto our high conviction list. So we see that up on screen there. And then the others we've already covered. So I'll just bring my notes into screen now, and then if you don't get a chance to write these down or you'd like these sent to you, then please email Leon at investorsignals.com and I'll happy to just email them through to you. Now, one of our I'll bring these notes in and we'll have a look at them. So in the US, I've started buying DWDP. I think Walmart looks okay value. I think Intel at $42, and we're just keeping an eye out for Microsoft. So I'll just start to build those out with a focus on the Dow 30, and maybe next week we'll do a special coverage on the Dow 30 stocks. Looking at the general notes, so Lendlease, we've covered that. Brambles, so these are the ones that I've just gone through now. So Carl had a bit of a reversal during the week and is back on support, but I think probably out of these, Seek and Aristocrat look good to me. CWY, I like the look of that. AGLs appears to be getting more oversold, so I think you need to continue just to think about that. QBE is one that hasn't yet had a sell-off, so we're waiting for that to sell off and create a buy signal. ASX, I think, is good value. GPT, I think, is an okay buy. Hack, we've created a level there to keep an eye on. I'm going to remove ASX from there because that's now on the high conviction. IAG sub $7. Iris is approaching support levels. Macquarie, we're just starting to bring that onto our watch list and keep an eye on it. And Wesfarmers, we're mindful that it's coming into that support range. The other topic we covered in last week's recording was the yield-sensitive names. And on the high conviction list, I think URW, which is the Unibail Rodemco, which acquired Westfield, I think that's very oversold. The theme from last week's webinar was looking for gold to rally, and that's happened. So we've seen Newcrest and Evolution do well over the course of the last week. So that aspect of the high conviction call has been right. Now, we now add to the list ASX, that that's coming into support, and we also add CWY. On the short side, these have really played out quite well: Bank of Queensland, Oz, Iluka, Boral, and Rio. So for the most part, I think you close those shorts out now, and we'll revisit some new algorithm sell signals. What we might do is actually add in here NWS. So that was News Corp. We'll just put here that there's a lower high, and we'll start to watch that one. All right, thank you for listening in, and if you'd like access to these notes, don't hesitate to email a request through. Thank you.